We have some breaking economic news. The Bank of Canada is holding its key interest rate at 2.25% in its first announcement of 2026. Here's how the Bank of Canada governor weighed the decision.
Our forecast for economic growth and inflation in Canada has not changed significantly since our October projection. As the Canadian economy continues to adjust to U.S. trade restrictions, we expect the economy to grow modestly and inflation to stay close to our 2% target. However, uncertainty around our forecast is heightened. The range of possible outcomes is wider than usual. U.S. trade policy remains unpredictable, and geopolitical risks are elevated.
Anis Haidari joins us now for more on this announcement. So, Anis, you were listening in with me as the governor described the decision just a little while ago now. What else stood out to you?
One of the things that Tiff Macklem was talking about was how uncertainty has been changing over the last few months. And ironically, that makes things even more uncertain for the Bank of Canada. And it's part of why it seems like they are just holding steady with interest rates right now, leaving them at 2.25%. We've heard language out of the governor in his press conference and taking questions from reporters today that really shows the elephant in the room for the Bank of Canada right now, as is for most players in the Canadian economy, is the United States. What happens with CUSMA, that free trade deal between Canada, Mexico, and the United States? It's certainly being looked at, if not totally renegotiated, possibly in the coming months and year. And there have been very mixed messages from American politicians, not just Donald Trump, about what is to come with CUSMA. And that factors into the Bank of Canada's decision to leave things where they are right now. They are worried about uncertainty in the economy. And one thing to point out is that, frankly, the monetary policy, interest rates that the Bank of Canada can control, it really can't do a lot about tariffs. What it can do is make borrowing money cheaper, which can help Canadian businesses and Canadian consumers spend money, and that can theoretically stimulate the economy. It also can cause inflation, which is why when inflation is under control, as Tiff Macklem has implied he feels it is right now, at least moderately so, they don't want to increase interest rates yet. They want to wait until the economy might be in need of a boost to increase interest rates so that, yeah, if inflation were to go up from increased interest rates, at least you'd get some needed economic stimulus at the same time. You know, all of that is to say, really what we heard from Tiff Macklem was sort of rehashing of Economics 101. But for Canadians who are at home and are wondering, like, why won't my mortgage get any cheaper? Why won't my credit cards get any cheaper? Why is borrowing money still staying the same, even though the economy might feel a little bit sluggish? Well, the big reason is that the Bank of Canada says they're just not sure what's to come with the United States yet. And until there's a little more clarity there, which there may not be at all, they want to hold their horses at this point. Inflation seems to be under control by the Bank of Canada's measures. And while there are other indicators in the economy that are a little bit sluggish, nothing is sounding red alert right now. I would say that they're at yellow alert because they just don't know what's to come from the United States at this point, though.
Okay, Anis, we really appreciate all of this. Thank you. The CBC's Anis Haidari for us.